Hey traders, this is Ron Haidt at Market Tamer. Happy Tuesday. Hope you're having a fantastic day. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk and specific financial issues. You should always be discussed with your financial advisor. Markets were up today. Spiders did hold the 20-day EMA in red. We pushed right back up. Now we're approaching new all-time highs. We take a look at the Dow, up 0.6%, and the previous closing high would have been right here at 273.38, 3 cents away from a new closing high. And then we take a look at the Qs. Previous high was on 715. We're almost right back up there as well. Bulls have the edge. Semis had a good day, and they did close at new all-time highs, finishing at the highs of the day, up over 1%. All right, how about NFLX? We talked about this one yesterday with the hammer after the earnings report. Moved down on the 18th. So it came down, had the hammer. I said to you guys, in order to have confirmation, we'd like to see a gap up and hopefully it closed near the highs of the day. That would be a perfect scenario, even with really good volume. Well, none of that happened. The stock actually opened, well, it closed the previous day at 310.62. It opened at 311.44. So we had a little slightly 80-cent or so higher open, and then we ended up closing near the lows of the day. So the idea of a hammer is completely thrown out the door. Support remains somewhere down here, 240, 250-ish, and that's why I like to wait for confirmation and not consider even rolling those long puts down, because this way I would still have a higher delta. My stock would still be protected at a very high rate, almost dollar for dollar, but not quite. And if you rolled those long puts down too early, now you're back down to a 0.5 delta. And if the stock rolls over today by $3, you're only really protecting, in theory, about 50 cents of the dollar drop. So you put all that together, when you have an earnings gap down, that's fine. Had a high wave doji, next day went lower, then we get a hammer showing signs the bears might be losing their grip, and then they come right back in today. So that long put would still be all the way back up here, protecting the stock until we see some signs of a bottom. Okay, I hope that's helpful. How about Kraft-Heinz? I keep getting asked about this one because I'm watching it too personally. The stock's been beaten up. It's one of Buffett's worst performers as well. It's starting to get a little bit of a push here. If I zoom in, you can see it a little closer. Volume's really not coming in though. What I'm still waiting for is a close above some of these highs. Let's say that high right there, the close 32.81, almost $1 higher yet before we break above there, and then we would go to the gap fill at 35. Then we can start talking about a full gap fill up there at 47.50. There's a lot more that needs to happen. Yes, it's perking up a little bit, but it still hasn't broken out. How about Biogen IDEC? BIIB. This one is breaking out to the upside. Stock jumped almost 5% today. In doing so, though, it's cleared all the previous highs, just like what we're wanting KHC to do. Volume did pick up today, although it was not extraordinary. Target, 200-day moving average in purple, right up there around 280. And then a gap fill. What I would consider as an end-of-day trailing stop would be the red line, the 20-day EMA. How about Harley-Davidson for the motorcycle fans out there? It seems, for whatever reason, 33-ish. It happened here in January, here in late January, almost March. Did happen the end of May, beginning of June, right when the market sell-off ended as June began, and that's what we gapped down to today. Some funds are watching this $33 area. That would be my end of day stop. We get below there on a closing basis, especially with a pickup in volume, it shows this line can't hold the support anymore. Knowing that, there's about 10% price difference between where the stock closed today after its earnings were released, this morning. So if I'm okay with that kind of stop, upside targets, pretty much up here at 41, 42, and then 44. That would be the upside target. How about PHM, Pulte Homes? They had earnings. Stocks had a pretty decent year. It hasn't gone up it's not a high flyer, but it certainly went up a decent amount from January to now. But look what it did. It closed below $31, something it really hasn't done at all. Now, it just barely did it, but it did it. That means the next target is over $2 lower, almost 10% lower here at 28. So FYI, that would be a directional change in Pulte Home, especially on earnings-based, fundamentally based, and that massive spike in volume. And I got a few questions on oil. I really don't talk about oil a whole lot. It's just not that, to me, big reward to risk type scenario right now. The bigger play was back here in October when you had the stock breaking big moving averages, the 20-day crossing down through the 50-day, then the stock broke the 200-day. and then it dropped a few dollars. Once we got above it, the 50-day, we then started pushing higher, right? The 20 crossed up through the 50 as well. That pushed us up to here. Then we have another crossover down here, and now it's just playing back and forth. And unless it breaks the most recent major swing high just under 14 or breaks the low here, it's really just in a trading range. I mean, almost, above 14, the highs at 16, or below here, 1050, then you go to 950. Those aren't huge moves. So to me, oil right now just isn't all that interesting. I know it's in the headlines with Iran and other stuff going on, but technically speaking, from a daily chart perspective, not much happening. If I were to take you back and give you maybe a 2-year weekly view, each candle now represents 1 week. You can see the congestion. Support's not far off. Resistance is up here. It really needs to break out from one of those highs or lows. So that is it, folks. Wish you all the best, and I'll see you in the next video. Take care.